Hey everybody, great to be back with you. Mike Fairborn here for our ThinkScript class. I've been looking forward to this class for quite some time. As you guys might know, I do take a lot of different looks, different perspectives at volume itself. I like to see what volume is accumulating over a period of time. As it turns out, looking into it more detail and really kind of diving in to some of the more interesting volume indicators out there, like, say for example, the one that's been around since 1963, on balance volume. Well, there is an update since 1963, which I didn't know. It is fairly recent. Volume flow indicator. I want to take a look at that today specifically and show you some adjustments to the original on balance volume that VFI holds that I think are really quite fascinating. I want to just put this straightforward out to you so we can see volume building just with a simple scan. And that I think could be really, really helpful to see where maybe the smart money is accumulating over into certain stocks specifically. So look forward to diving into that with you. Folks, I'm joined in the chat by a good friend and colleague of mine, Mr. Cameron May, filling in for JB, I believe, today. So great to have Cam here with us. You can follow us both, Cameron May CS, Mike Fairborn CS. Welcome to the rest of you. As always, our usual suspects here, Ray, Rocky. We've got Riceberg. Hello to you, Bob and Will. Kelly, how's it going? As well as Joe, Chris B, and Bob and John. Fantastic. Great to have you on board. Folks, let's dive into some disclosures so we could take a look at this and really kind of break down this indicator, set it up into a scan, and help us find some of these major volume accumulations within stocks that are really self-managed and controllable over different time frames that we're after. So let's dive into some disclosures here. Information here is for general information purposes only. The paper money software application is for education purposes only. Backtesting results presented are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results. Now, investing does involve risk for some products more than your original investment. Past performance of any security strategy does not guarantee future results or success. I do have a list of future disclosures listed down below that is simply there. We want to have those disclosures there because I did want to show you some of the futures charts. We do that from time to time, but we do not trade futures within this class. Okay, a quick note, just as we go back to it and we take a look at some of the steps to ThinkScripting, we've discussed a number of different indicators in this class, and we'll continue to do that. Indicators are really helpful because they can help us right here. That is identifying the goal and meeting that goal. If we've got an indicator that's pre-built in the system, it's already running with Thinkorswim. The software, the coding recognizes that, and then we can put it to use. Today, like we've done in the past, we've looked at momentum with prices, we've looked at trends, we've looked at other sorts of volume indications and crossovers. Today, though, we are back to I got to spell it out. It's not volatility, although what's interesting is this indicator does have a volatility adjustment to it, which makes it so interesting, which is a volume adjustment to volume. And that is exactly the problem, I think, that on balance volume indicator had. Anyhow, we'll hit that in just a second here. What I wanted to state, though, as we look at this is, we will go through. I did want to explain, too, in detail, some of the coding, some of the thoughts behind the coding, what we looked at as we're viewing this indicator. And there are a couple of different ways, too, to utilize this indicator. One of the key ones that we've talked about with volume is divergence. I'm going to share that ThinkScript code with you. We've got that up and running. It is working, and we'll get to that just momentarily. All right, well, with that, let's go ahead and pull up the platform and get the show on the road here. In fact, I've got it pulled up with some comparisons as well. So I'll share that on my screen here. We've got to add that indicator in. Perfect. Okay, good. So let's go ahead and do that. Sometimes it's a little bit tricky to pull on that second window, but there we go. There's not a lot of room up there with all these different little icons to click on, but we pulled it up and we have it ready to go. That is, gosh, well, that's silver right there. Let's go ahead and move on into SPX. We'll see where SPX is at right now. We've talked about this before, and we just said, hey, whatever direction the SPX is maybe going in, the S&P 500 is a market guide. Maybe that could influence the way that you're going to be coding the ThinkScript. Is it going to be a bullish ThinkScript or whatever the case? A lot of what we do here is bullish, although when the markets are down, like right through here, we had a series of bearish type scripts. We want to kind of make them relevant to current market conditions so that perhaps you might find them useful and helpful in your own sort of investing processes or trading processes. Okay, so with that, folks, I wanted to, first of all, let's talk about this on-balance volume. Folks, 1963, the on-balance volume came out. You got to spell it out here. On-balance volume, and the cool thing about it is very, very similar to the money flow, although it is not the same as money flow. It is, in fact, quite similar to it. It's got a different calculation, but virtually the same in a lot of different fronts. I have used that before. Now, we're not going to see it here, are we? We've got to go into a stock. I'll pull up the stock example here of Apple. And as you can see down below here, let me just pull this up real quick. Oh, there we go. As we look at our example down below, what this OBV does, for short, on balance volume, it's a cumulative indicator. And you'll notice that the volume, and this is the beautiful thing about it, accumulation or distribution, it takes all this volume, whatever range you're looking at, and in this case, well, where's it going to? A year ago. We can set up specifically how far back we want to go with the VHI, volume flow indicator, in just a second. However, to get the basics down, because we're building on an old indicator and introducing something quite new, I think that corrects a real issue, and I would say maybe one of the only major issues that OBV has, which was so fascinating to find it. But it takes this volume and it says, do we add it or do we subtract it from what it's been showing us here? And it shows an accumulation or a distribution of shares. Now you can see over here, when prices go up, it will take that volume and it will add it or subtract it, which is a really cool feature, because what ultimately happens when that occurs is if we are getting stronger volume on the upside, when prices are going up, we're getting more buying activity coming in. And what that's going to do, more volume down here, that's going to influence this as long as we close up on the day. If we close higher on the day, it simply adds it to our on-balance volume. If we close lower on the day, and we've got a comparable red here, like right in here, it simply subtracts this. Now you'll notice that the size of the volume that's getting subtracted here, because the volume is low, there's a lot less interest when it came time to sell this. Okay, but there was more interest when it came time to buy, and that's pretty clear because the line was so much stronger. One of the things we're looking at here is divergence. This high point right here, this high range, how did that match up with this high range? Okay, this was the high price move, but notice what happened right over here with Apple. I thought it was a great example, actually, when it took shape. It actually foretold, according to the on-balance volume, that we were going to take out this high right here. We were going to take it out according to the money flow, on-balance volume, or money flow, very, very similar, but look right there. See that? As soon as we broke that level right there, although we did not break price, and guess what else we did? We consolidated further. It still said we're going to take out that high, and folks, we did. We took out that high. We broke above that level. In fact, when we broke above right here, this was actually really quite telling. When you broke above this level right there, look how much higher we are there. You see that? That's clearly above this high range, but prices are the same. That horizontal line is not changing. Now, I'm going to do something really important, and this ties into divergences. Look at this. You see this? If I drag this to the left, I love using data in a visual format because you can use, there's a lot of price data going on behind the scenes here, but visually we can pick up on this very, very easily, right? Look what we did. We took out this high right there, did we not? We broke it. I mean, we're higher than that level. We're clearly higher than this level here too. This level is basically here. Did we quite reach this range yet? No, we didn't. But what it says is if you take out this high range right there, which we did at that point, even though there was another correction there, a smaller correction, it says based upon the smart money, the buying of analysts or managers or fund managers, whatever the case is, whoever's pressuring or buying that volume and selling less collectively, it says you're going to reach that level. Okay, so what could that mean as we're looking at this chart? This move up could be, in fact, a possible what? Flag formation. Now we don't have any indications of that just yet. We see the beginning stages of a flag, a nice breakout, post earnings, and look at this. It even after a negative earnings, what did it do? What did it do after a negative earnings announcement? Folks, the earnings was right here. It still went higher. You always ask yourself, you say, what is it that maybe somebody else that really has a lot of information, why are they buying? And remember, they're not just saying they're buying. They're not just saying, I think it's a good stock. They're putting their money where their mouth is. I mean, this is volume coming in. And that's what this helps to track. So that kind of puts this in context and why that's valuable. Now, what I pointed out here was that divergence, which I think is really important because it says, hey, relative to price and previous money flow moves, what's happening right in here, in this range that we're looking at. So that by itself is a pretty cool scan. Now, let's get into the caveat where it doesn't always, where there can be problems. What do you guys think about this, first of all? I mean, there's something that comes to my mind right off the top, and that is it's all based upon if you close higher or close lower on the day. That volume is added or subtracted. So what if I close higher by just a single penny, just a penny? Well, what's that going to do? It's still going to influence this action down here. Now, normally when you get this kind of price action or this kind of OBV action, you're getting some pretty strong prices coming in here. In other words, higher closes day after day after day and substantial above the prior day. Maybe it's 1%, maybe it's up to 3% day to day to day. You might be getting something like that, like a nice rally, right? 200 to 210, for example, just over a few days. But what if we just closed up on one of those days by a penny? Now, it's not a huge deal, but all that volume does go down below here. It's accumulated over time. It's not a huge deal unless we have a massive spike in volume. And I've seen a totally interesting OBV that is totally sort of like, it's fake because one bar shows something like this down here. Like you let's say on one of these days over here, we closed higher by a penny. Like this one is actually very close. And the volume was like this. The volume was like this. I mean, it's just ridiculous. It was like, and what's really happening on that is you're getting maybe some fund managers that could be selling and some could be buying. There's a lot of stuff that can really generate massive volume. But what that's going to do, that could easily influence over here this chart and say, I mean, it could go like this. The OBV, okay, on this bar, I should say, on this bar, we were hiking. It could have a move like that. And you're going, whoa, OBV is going to break above this high because we just extended above here. What's that high? Right there. And we're down here and we're getting this bad read because of that volume. We had a very, very small close above there. And so that's risky. That can throw out the OBV. And you have to really look at it closely to say, what does this volume look like over this range? You know, and how do I adjust for it? Because you really can't adjust that indicator. That's where the VFI comes in. It adjusts it. And let's pull up the VFI right now, and I'm going to show you some features with it. Now, it's new. This was invented like right around 2005. It's been around still a while, and I hadn't been really that familiar with it. I'd always been using like an OBV or a money flow. Here is, it's actually got to spell it out. So volume flow indicator, AKA VFI. This hadn't been working, and it does. Great. First time. Now, it states here, is a long-term trend following study, and that's exactly what we're after. We're looking at, is that volume accumulating or distributing over a period of time? Are people buying the shares or are they selling it? Because it takes a lot of buying to influence this line, believe it or not. And like we said, that can be institutional money that might be putting in a lot of money, and they might have really high convictions, and that's why traders find it interesting. And a lot of times, I'll just say this, investors find it interesting. It's saying, you know, can we get on the right side of where the buyers are, where the real, you know, where the buyers are coming in, bigger money. It can be influenced by retail traders, but it's very, very difficult. Those guys all have to be on the same page, and it's more like a smart money indicator in a lot of ways, but it's a cool way to see it. just to continue here. So is a long-term trend following study, which uses the same principle as on-balance volume. You guys know that principle now. When it closes up, we take the volume and we add it to the indicator. When it closes down on the day, from the prior day, we subtract that volume. Instead of comparing the two close prices of adjacent bars, it compares changes in the typical price with a so-called cutoff value based upon the standard deviation. Now, this cutoff value, you can put in different variations, and I'll show you that adjustment right here. But it's saying if you're getting that big volume spike, basically, positive or negative, it's going to neutralize that. And so you're basically just going to get a smoothing process over a period of time. And that period of time, I'm going to show you what that looks like right here. We've got it on. I've got to take this off. Let's go ahead and put it on right now. So volume flow indicator. We'll click on this. Now, these are in fact the defaults, and this is the time frame. This is basically what they're doing, and I looked into the defaults. They're using basically a half year in here. I think a full year in the market, like market days, is something along the lines of 255 days, something like that. But it's very close. They have 130 in here days. So they're using a half of a year. They're trying to smooth that data and knock out any crazy swings so that we get a better read on that volume. Now, as we look at it, the next point here is that max volume cutoff. And they're saying basically here, ignore any volume that is 2.5 times higher. That's a lot higher too. I mean, that's like, so a lot of times you're getting, 100% volume more than the average, and then you're getting 200% volume, and then you're getting 250% more volume. That's a lot more volume coming in. And they're saying, hey, we've got to narrow this down because that's a big spike that could totally throw off the OBV, in this case, the VFI. So it's really quite interesting how they've done that. I've just kept this the same. They did mention a standard deviation, but generally speaking, yeah, if you're going to be like 2.5 times higher, it could be one of those major spikes. And so just keep that in mind. You can always change this, and we can look at a shorter period of time, which I'm going to do. I want to look at a longer period and kind of show you what that might look like for maybe like investors, like long-term accumulation. And then we'll go to a shorter term. And by the way, that shorter term could do much better with a lot of what you guys are looking for. I mean, in a lot of cases, I think traders might be trading or even shorter term investors, 1 to 3 months is really a common time frame. And what would that be in terms of our length that we're looking at over a smoothing period? It's just going to use those last time frames. You'd be looking at 20 to 60 days roughly. Maybe it's 65, but 20 to 60, right in that range. And you can set a 20 up here or a 60 based upon your time frame you'd be looking to trade. That's what's really cool about this too. So it gives us sort of that OBV, that on-balance volume that we're looking for, but over the time frame that we want to utilize as well. What is our standard time frame? Because if we're getting a spike, if we're getting a divergence that's occurring over the last month, that's of real interest to us if we trade up to a month's time frame. We might not see that spike if it's over half a year, for example. So keeping it short could easily match the time frame you're after. Let's take a look at it. All right, so let's pull it up. Let's do this. I'm gonna make that a little bit, I think if I use a brighter color, you'll see it a little bit better against that black. And we'll just go to a 2 width. And I don't know if we actually even need, you know what, I'm gonna take out volume as well. You already know what volume's doing. We talked about how it filters in. Let's just remove that, and then you can see what we're after here. Okay, this is a really, really long term. Okay, we're looking at, this is a 1 year's time frame. So just take this for perspective. You're going like this. It's saying, I'm going to take this time frame over here. Well, what's happened through a lot of that time frame? We've dipped. And there's a lot of negatives in there, actually. I mean, there's a lot of down days. In fact, a big portion of this move was actually to the downside. Quite a bit was sideways, but really down, sideways, and a little bit up. Not a ton of ups. There was a little up over here as well. Mostly down or sideways. It's influencing this. Now, you might say, well, yeah, that's the longer term. I want to make sure that the weekly is maybe showing more strength, because there's been some sellers in here until recently, and we saw how the OBV picked up on that. Watch what happens when I move this to a 20-day. So we're just looking over the last 1 month or two. And let's do 2 months. Okay. Let's do a 40-day, and we'll just see what that looks like. Can't really do this on an OBV and minimize those major volume spikes. So here is 40. That's it. That's the length we're going to be taking a look at, and we're minimizing it over that time frame. Now you can see some significant spikes. You can see over here. Yes, we did break above that high, but that is a much higher level over here than it was previously, right? So it's showing you over the time frame that you might be trading, is there accumulation or distribution in the shares? And that's the key point that I wanted to focus in on. Okay. We've never been able to isolate this before. 2 months back. Here we go. Right here, basically, right over here. How are we doing on that? What does that accumulation look like? And relative to prices, are we getting a distribution? We're getting a couple of things we can look at on Apple here for sure. Okay, but let's pull that back. All right, so that is how this works. Let's pull up another company in here, IDXX, and we'll show you another one over here. Okay, now the question is when we run a scan on this in ThinkScript, can we set this up so that it goes back and looks over a period of time, whether it be a month's time frame or a 2 months time frame? And what we're looking for the scan to do is simply say this: the VFI, okay, was up, and prices, the price up here, and this is what creates that divergence. The price was flat or down. Do you see how that builds a divergence right there? Look at that. That is fascinating, because if we could figure out a way to do that, it could be really quite interesting. On any given day over a period of time, let's just say we're looking back over, what do we say? I might do something just initially up front. We can run through a shorter term time frame, but let's say, for example, over the past 22 days or 20 days, we've had, I don't know, 5 times where VFI was up and prices were down. Now, by definition, that is a divergence. Do you see it? And so you're saying, wow, I should say prices weren't up as much, but volume was up substantially higher. There's a difference between the two. Prices didn't go up, but volume, VFI did accumulate higher. That's what we're after. That's how you can spot that volume. In other words, if we're coming over here, again, we look at the volume. Is it accumulating according to the way that this indicator is showing this for us, right? If we're looking at it. And by the way, you notice it cut that out? That massive spike over here, because that's just so high, right? The move over here was substantially smaller on that run right there. So it didn't just whack this chart out completely. It kind of keeps things in check, right? So the volatility doesn't get the best of the volume. Okay, so with that though, that's what we're looking at here. IDEX was one of them that did come up, and we actually saw that accumulation over in this range right here. And it just basically said that there's going to be, in other words, what it is spotted this, and it said, based on this volume data relative to prices up here, we were getting an accumulation. Now, I did it over a little bit longer time frame, but it was showing that accumulation. Let's pull it up right now, and I'll show it to you. This is the scan. Okay. Let's see. We got it over here saved. Yeah, and I got it to the VFI down here at the bottom. There it is. VFI divergence. Let's pull it up. This is the scan right here. We'll show you what that looks like. This one was over a shorter period of time. Yeah, so the initial default one is over a 22-day time frame. So that's the look back period for that VFI. Let me just change that color real quick. There we go. The VFI right there. So it's looking back over a period of 22 bars, which is about a month. That's my estimate of the month, 20 to 22, whatever. It's right in that range. But then we had a minimum number of divergences. That's the minimum divergences signals. That's what's required to make this work. We're using the fold feature. The fold is really great because what the fold does is the fold will go back and it looks back, it says, okay, we had one indication over here, dot, dot, dot. We had another indication here. We're counting back to 5, and it keeps looking back over that condition until you've got at least 5 of those, up to 5. That's how this works. Okay? And all we're simply doing is we're saying, hey, did the count, was it greater than the minimum of divergences? We're trying to get that number higher. The actual divergence count itself. The minimum's got to be 5, greater than or equal to. I've looked at this code now for about, I don't know, 9 months. And once you start utilizing it, it's such a cool feature. You can do a lot with the fold. Anytime you're going back and saying, hey, did it happen again? Did it happen here, 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 here? The easiest thing of all is I'm building it on the volume flow indicator. I don't have to create an indicator. It's all there right at my fingertips. So let me show this to you right now. I'm going to go ahead and point this out. And we'll run this, sure, let's do it on the NASDAQ 100 right now. In fact, let me just, I'll do this too while you've got it, so you can run it with me at the same time. Let me just share this guy. And again, so these scripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform, we have good data. As long as that data is clean, it should give us what we're after here. So let's do this. I'm going to go ahead and shoot this out to you guys right now in the chat. Here is that script. There we go. There we go. Okay. Right there. And that is a script for the scan. Now, you could easily exchange if you wanted to just choose the OBV. I wanted to do the newer one because I think there's some cool adaptations to it. But you would honestly, all you'd need to do is change this to the unbalanced volume because that fold has really got us covered over here. Is that interesting? Oh, wait, I'm sorry. We need to change this over here to OBV as well. OBV, because we're defining VFI. Do you see how it's highlighting? We've got VFI that equals the unbalanced volume indicator. For example, if we were to do it that way, it's interchangeable. If you want to choose either one to try to find that volume accumulation, it's right there at your fingertips. All right, let's do this. IDXX, we looked at it already. On this particular one, though, you'll notice that as I do this, we're just using the defaults. So we're going over a longer period of time, and that's okay too. But if I pull up IDEX, I've got to set this up over the time frame that we're looking at because I don't have the defaults on the scanner set up. Those can be adjusted as well, but it's just simply going on the default here, which is okay. We can see it, we can scan it, whatever we want. You can see over that short period of time on the 130 days, half the year, and just looking at the more recent data, we're just saying the last 22 days out of the 130 is all we're looking at here. Are we seeing that change occur? This is the best way, I think, to use the scan itself. The chart can be used to narrow in a shorter time frame, but the scan, give us at least a half a year, and then let's just explore what's happening over that time frame. So we're going back. Here we are. This is the, what is this? This is around the, I don't know, the 18th or so. If we scoot back over here, I'm going to go just kind of in this general range, and we're saying, okay, how did the volume look relative to price action to the upside? Well, as you can see over here, we began to break higher right here, and you get really interesting scenarios here because look at that breakout. Oh, I messed up. Hang on. Let me just draw this as best I can here. It was very close. Sometimes it's a little bit earlier than this, but that's IDEX, right? It says we're getting some big buying. Look where that buying came ahead of, right there, ahead of earnings. So somebody may be accumulating, possibly ahead of earnings, possibly. What else do we have in here? Amazon's in there. So is Alphabet or Google. AMZN. Okay, over this time frame, if we're looking specifically back over those 22 bars, in fact, let's do this. I'm going to go ahead and point back over here. More buyers than sellers. I'm going to go ahead and expand this out right now. Let's just change that and see if we get a totally different basket full of companies. I'm gonna expand this out, and this is where it's really quite fun and cool and easy to do. I'm gonna go 44 days, basically 2 months. I'm just gonna double that number, but I'm gonna do more than double this number. Well, we can go at least to 10. Dare I go 15? We can actually go 15. So this is going to be looking back 15. Let's see how long this takes. This shouldn't be too long, actually, only on 100 stocks to look at. But I'm going to go ahead and pull this up right now. And we'll go ahead and click on this, and we'll scan it. We'll see how we do. So it's going to take a little bit longer. We're going like 3 times as long for that scan. It's kind of an in-depth one. Oh, that's something else. That's a paper trade. There you go. That was in there. That was just totally random. That paper trade just popped up. I have no idea what that was all about. Let's go ahead and take a look at some of these right now and see how they're doing. GEHC. So we've got GE Healthcare, which was the spinoff of GE. Let's take a look at this right now. Okay. Now we went back and think about what we just said. Out of the last 2 months, we've seen volume outperform price over the last 2 months. So 44 bars, there's at least 15 minimum. And I could actually create another script that shows us, how many divergences there were in that fold that it counted back. But it's at least greater than 50, greater than or equal to. Remember that it was greater than or equal to 15 according to the fold. And so are we seeing accumulation? Man, you don't have to look too far on that line to see it. Prices just kind of went like this. If we examine prices now on this GEHC, they just went up, and you notice they're really respecting this long-term resistance level, which there was a gap down here. You can see there was a touch up to this point, a touch here, and a major gap right there as well on earnings. It did gap over earnings, but prices have continued to hold over here. And remember, I'm trying to kind of isolate over that 2-month time frame. Are you guys seeing kind of the value of this? By the way, I don't think I'd be showing this to you if there might not be value, behind it. There could be something here because we're seeing buying accumulate, not just on these volume bars, but collectively over a period of time. And that's interesting, right? How do you decipher volume down here otherwise? How could we possibly tell? There's no way to see that this might be accumulating volume. But that line is pretty strong to the upside. Higher highs and higher lows. In fact, even with that gap, we still had some come in. So how might a person look at this? Well, one thing I would say, prices come down here. We did hold that support. If it were to bounce here, some might say, well, there's a possibility of a flag pattern here. And if we break above 80, we might have volume to kind of support us here as well to the upside. So just park that in the back of your mind. You might have some accumulation behind the scenes. You know what actually happens with that? There's a float out there. There's a float of shares that are available out in the public. But what happens when the float gets kind of tighter, when you have more buyers, right, that are coming in and taking positions on? The float might get a little bit tighter. And if you have more buyers than sellers, it becomes a little bit more sensitive to price action going forward. So just long story short, if this line is accumulating over a period of time, okay, if it's getting stronger, that float might be getting tighter and more sensitive to price movement. So it's difficult to see here, but fundamentalists that really, in a lot of cases, these big analysts and these big firms, they can't buy bull flags, you guys. They can't. They're too big. It might take them, and I just listened to a recent study on this, 2 to 3 weeks to put on a position. That's how much they're buying, because they don't want to move the price too much. They want to get in quietly for prices to move. So what is it? You ask yourself, are they seeing behind the scenes? Let's look long term, just for the heck of it. What are we seeing on the weekly chart over here? Okay. Not a ton. That's even a longer term chart. It's a new spinoff. What is it that GEHC might have in the works here that we don't know about? Could it cause us to do further investigation? Just a thought. I do a lot of further investigations because I do like to look at the fundamentals, and so I don't know, it's really interesting to me to go through these and kind of take a look at them. Airbnb's in there as well. Intuit is. Let's take a look at Intuit. Just shot to the top of the list in terms of performance. Okay, so we had a ton of accumulation here, but we did pull back, right? So could this be a longer term potential accumulation? Ah, what are you saying there? Could it be a time? I mean, it looks terrible short term, but if you pull up the weekly chart, and this is just all just on the fly, why would people be holding in here? What's going on possibly? There's a longer term support level. Now that's a break on a weekly chart. We've seen these breaks before on a daily. Say, for example, prices go up here, bull flag, and they come down and rest on a prior high. Sometimes, folks, they just staircase higher through here. They just staircase, staircase, staircase higher. And what that does is it kind of enables prices to get moving. And we were here for like all of last year sideways, and we had this strong move. So I don't know what that means, but we just gave back maybe like a 50% pullback there. So perhaps it goes. And I'm just giving you kind of an additional assessment that you can use when you look at that volume accumulation. There is a prior high right there. Is that the one? It might be the weekly one we were just looking at. Okay, that was a big gap up here. We're ahead of earnings. Some people might want to wait for earnings, but believe it or not, over that period of time, we had so much accumulation through here, and we did move up despite going down. So even with this pullback here, it just hasn't moved money flow, relatively speaking. Now you can look at it and still and watch it. And by the way, if prices go back down, maybe the runs occurred. So let's just hit a couple more so we can go through these. So on semiconductors, so that is one we could take a look at, as well as PayPal. Now the semiconductors, that's AMD. I know we had AMD. ON was one that had been maybe a lagger in the group. A lot of the semiconductors have already done this, starting with like, NVIDIA, right? And you've got AMD up quite high. You've got this kind of a pullback here. Don't know if this could be part of a larger term run, but this is one that maybe the values are still in check a little bit. I don't know. That's a pretty big rally off the bottom. Could it reverse and start a long upward trend? In other words, according to this indicator, somebody is buying, and they're buying heavy through here. We could scan back even further. You see what I mean? And we could look over here on that VFI to this range. We can change those numbers and just see if it still shows up in a list like this going back, I don't know, 95 bars or so. But we can pretty much tell, yeah, over this time frame, just looking at it on the chart, hey, there's been some accumulation. So folks, we're building on the OBV here with some adaptations. I could have easily shown you just the on-balance volume, but I wanted to show you the newer version. It's, let's put it this way, it's decades newer than, you can say decades, because it was 1963 that the OBV itself came out. And so park that in the back of your mind. These are some adjustments to it. See which one of these you like more. We've done a previous discussion on the money flow. This is going to be on the VFI, similar to money flow or on balance volume. But I shared that in the chat with you. I think we're good on that. But one last thing, and we're all set, and that's this. This code that we shared here for you, this is actually using the fold formula. The fold formula can be used anytime you're looking at a certain definition, and we're saying, hey, this is the indicator. Is it greater than 0? Okay, while price action itself is less than or equal to 0. And all we're simply doing is making that measurement. It's an interesting way to do divergence. Fold is the way to do it. To look back over a period of time with just a very basic calculation. Sometimes those are really helpful. Those basic calculations can give sometimes interesting ideas and interesting things to look at. So with that, folks, hey, if you're finding value from this discussion, smash that like button. Love to have you on board as well. If you're not already following us in Trader Talks. I don't think there was a survey out today. Oh, no, I don't think so. Cam would have posted it. So we're all set there. I didn't see one either, But let's see, how do you change the length on the scan script? So you do it right over here. So you right here, you can see, here's the script. I've got it pulled up. You just change the max bars right there. Now we were looking back about 2 months, and we're saying over that 2 month time frame, here is the minimum number of divergences you want to see. And that's a lot. Now we're making that number tighter and tighter the more we, require more divergences to occur there. So I would say 44 to 15, that's quite a bit of divergences. You're getting one going up and the other one not going up. Price, for example, or they're staying at roughly equal. That's a lot of divergences, but that's where you change it right there. And by the way, you have to also change the fold down here too to match the number of minimum divergences. So I'm just making the adjustments right here. Forget that scan. I should just take this out. This is just a scan. In fact, I'll do that and save it that way. Just the scan criteria, because that's going to adjust. Okay? Is that helpful? All right. There you guys go. Perfect. Well, hey, great to have you on board. Thank you, Cam, for your help as always. You guys have a fantastic rest of the day and have fun with this script and just plugging in different indicators, finding those divergences out there. All right. On that note, see y'all next time. Bye-bye.